Hi, I'm Nadia.
And I'm Nicole, and welcome to the Well Twins channel.
In this video, we will discuss 5 different investing accounts to use for children and the key points you should be aware of for each account so you can choose the best option for your family.
If that sounds good to you, then hit the like button and let's jump into it.
All right, number 1. Now, when most people think about investment accounts for kids, a Roth IRA is probably not on their radar.
That's true.
That's because many people think a Roth IRA is just a retirement account. This account is actually one of the best accounts to use to begin investing for your kids. Now, before you go setting it up and placing money in it, there are some requirements you must know first.
In order to start investing in a Roth IRA for your child, the child first must have made money from earned income. It just can't be money that they got from allowances or gifts, okay?
Yep.
Now, if you have a teenager at home who just started babysitting, has a yard business, or has a summer job, a Roth IRA is a better account to set up for them and place their earnings instead of a savings account.
Yeah, the money in the account has already been taxed, so the money and income in that account grow tax-free. The rate of return on their money in the Roth IRA is also greater than they would receive just having their money sit in a regular savings account.
Which is good because that's what we want to do, grow our money. Now, if they get paid in the cash, you just have to keep track of what they are paid on a spreadsheet or a notebook.
Yeah.
If the IRS comes asking, okay?
Yeah, just keep a record.
If they have a W-2, then it makes it even easier to track.
Yeah. When it comes to a Roth IRA, there are limits on how much you can place or contribute into an account. The contribution cannot be more than what your child made in the year that you're opening up that account, and the contributions cannot be more than $6,000 in a year.
Now, your child doesn't have to be the only one responsible for putting money into their Roth IRA account.
Yeah.
They can spend some of the money that they've made working and contribute what they want, while you, as the parent, can help by putting in the difference into the IRA account.
Yeah, for example, let's say your child earned $1,000, but they spent $500. You can put the difference of the $500 yourself so that they have a total of $1,000 in the account, just as long as that money that you're putting in doesn't go over how much they made for that year.
Now, the good thing is that with the Roth IRA account, your child can take the money that they contributed out at any time without being penalized or hit with taxes.
Yep.
However, the gains that they are earning in that account from the market on those contributions can't be taken out before 5 years and must be also for a qualified reason. If they do take that money out, they will have to pay taxes and may face additional penalties.
Yeah. After having a Roth IRA account open for at least 5 years, the child can take out the money without being taxed for expenses like a first house, medical or school expenses, or any other qualified expenses or reasons that the IRS has labeled.
It has to be for a qualified reason.
This makes it better, in my opinion, than a 529 plan because it is more flexible. 529 plans are mostly for education. Okay?
Yeah, so Roth IRA plans are more flexible than 529 plans, okay? Now, number 2, if your child is too young to earn an income, you can invest for them by opening up a custodial brokerage account.
Yep.
Another name for a custodial brokerage account is a UTMA account for your child.
You can use a UTMA or custodial brokerage account to buy stock, bonds, or hold cash for your child. This account does not have a limit to the amount of money you can place in it, but you have to be aware of the gifting rules under the IRS. Under the IRS rules, you have to claim gifts over $15,000.
Okay, remember that we have to be aware of what the IRS wants us to do, okay? Additionally, unlike the Roth IRA, the UTMA account is not tax efficient, meaning there are no tax breaks on this type of account. Opening up a custodial brokerage account to invest for your child is pretty straightforward too. You can open up a custodial brokerage account with most brokers on your own just by filling out a few forms and some paperwork.
Yeah, when you open up the UTMA account, you as a parent have complete control over the account until the child reaches the age requirement, which is the age of majority. Now, even though you have complete control over the money and the securities in this account, the account is for the benefit of your child, and any withdrawals can only be made for the benefit of your child.
Once the child hits the age requirement, they can choose what they want to do with the money and the securities that are in the account.
Yep.
Now, depending on the state, the age ranges from 18 years old to 21 years old. Now, if you want to help your child get familiar with the process of trading in their investment account and have a sense of ownership and play a role in their own personal finances, you can let your child pick out some of the investments that they bought in their account.
Yeah, this helps build confidence in the kids to begin investing on their own and also gives them a sense of pride. I do this with my daughter, and she loves to tell people, oh, I own this stock or that stock. It just makes it a lot more fun for them, and they do understand at a young age. So it's better to start early than not.
I can attest to that. Her little one always comes to me and say, hey, Auntie, guess what? I own this stock now.
Whatever. Now, number 3. The third account we want to discuss is the UTMA account. UTMA stands for Uniform Transfer to Minors Act account. A UTMA account is a type of irrevocable trust that you can set up and begin investing for your child. Not only can you place financial securities in this account like stocks and bonds, but you can also include real estate, cars, art, businesses, etc. Basically, anything that makes money or has value can go into this account.
Yes, the UTMA account is different from other irrevocable trusts because you do not need an attorney to set up the account for you. So in that respect, it is a lot faster and cheaper to set up this account. However, since it is a type of irrevocable trust, the best way to set up a UTMA account is with the help of an estate attorney.
Yeah, an estate attorney can maximize tax benefits and put controls in place that can dictate the amount of money that can be taken out and when it can be taken out once the child reaches the legal age of majority between the ages of 18 and 21. If you do not use an estate attorney or have controls put in place, once your child reaches legal age, they can do what they want with anything in the UTMA account.
They can do what they want, guys. Now, hopefully you have some good kids that you're raising so that wouldn't be a problem. But just as an FYI, if you live in South Carolina or Vermont, you cannot open a UTMA account. Now, if you want even more control over what your child does with the assets you place in a trust, it is best to go with another type of irrevocable trust rather than just a UTMA account. To learn more about irrevocable or revocable trust, check out our video that we have linked at the end of this one.
Yeah. Number 4, high yield savings accounts. Now, we know what you're thinking. How is opening a savings account investing for your child?
How is it, Nadia?
Well, say you're hesitant to put money in the stock market or want to give your child some flexibility in using the money they have in their account from items they want to purchase without many restrictions. Well, a high yield savings account kind of fits the bill.
It does. Now, high yield savings accounts are FDIC insured and offer higher interest than a regular savings account. Since a child cannot have their own bank account until their age of 18, you have to invest for them. And you will have to set up a high yield joint savings account. Until they are able to open up their own savings account, the joint account you open for them at the bank can pay them interest on their money.
Yeah, the best banks to open a high yield savings account are usually online. They're the ones that pay the most interest. Just make sure you go with a bank that doesn't require a minimum amount to be held in the account on a monthly basis and pays a high rate, okay? No need to have fees eating into your money that they save in their account. Is no reason for it.
Exactly. And what's also cool about a high yield joint savings account is that you can set it up so that you are notified of any withdrawals or have to sign for any withdrawals from the account if you think your child needs some extra guidance.
Yeah, don't set it up to like playing games and they're buying a bunch of extra lives or something, okay? You'll be notified if that happens, right? Now, number 5, if you mainly want to help your child save for education, you can look into qualified tuition plans, also known as the 529 plan. The 529 plan is a state-sponsored investment plan that is governed by each state separately. It's a tax-exempt plan that you can use to pay for future tuition, books, room and board, etc. Okay?
Now, there are 2 options you can choose from for the 529 plan. You can either lock in tuition with a participating college now, or you can use it as a savings plan.
Yeah.
Not all states and universities allow for prepaid tuition, but all states give you the option to invest in a 529 plan as a savings plan.
Yeah. The state provides the investment choices and manages the 529 plan for you. Your money grows tax-free in the account. However, the money placed in the account is not tax deductible.
529 plans also offers the chance to invest in target date funds that can be used to move the money from risky investments to less risky investments based on how close your child is to attending college.
Yeah, 529 plans can only be used for qualified educational expenses. If you invest in an employer-sponsored 529 plan, you may have to pay taxes on the matching amount that your job contributes as if it were income.
Now, be aware of these rules, okay, guys? Now, there have also been changes at the federal level to allow for the money in 529 plans to be used for K to 12 grade, okay? But you should really check with your state and follow those guidelines.
Yeah, in New York, for instance, if you use the money in your 529 plan for kindergarten to 12th grade expenses, you may owe taxes on that money. Now, as you can see, with the 5 investment options we covered, the Roth IRA, UGMA, UTMA, and high-yield savings accounts.
Now, along with the 529
Along with the 529 plan, there are many ways to begin investing for your kids right now, so don't wait.
Also, if you found any value in this video, please show these twins some love, subscribe to the channel, and share this video with someone you care about.
See you guys in the next video.